Today, we are analyzing the core purpose of life insurance as it appears on the national portion of the insurance exam. The examiners want you to understand that life insurance is primarily designed to provide financial protection by replacing the economic value of an insured individual upon their death. In the context of the exam, you need to view the insured as an economic engine. When that engine stops, the fuel, which is the income, stops flowing to the beneficiaries. This is why the primary purpose is often cited as income replacement. Let us look at a concrete example that you might see in a test question. Imagine a 40-year-old professional earning $100,000 a year, who has a spouse and 2 young children. If this individual were to pass away tomorrow, the family loses 30 years of future earnings. Life insurance is the mechanism that creates an immediate estate to replace those lost wages so the dependents can maintain their current standard of living without facing immediate poverty. On the exam, you will likely be tested on the 2 primary methods used to determine the amount of insurance needed. These are the human life value approach and the needs approach. The human life value approach is a mathematical calculation based on the insured's current earnings and the number of years until retirement, adjusted for the cost of living and interest rates. Contrast this with the needs approach, which focuses on specific financial obligations such as a mortgage, car loans, or a college fund. You must be able to distinguish between these two because the exam loves to swap their definitions to trick you. Another critical purpose you will see tested is the concept of estate clearance or the cleanup fund. This refers to the immediate cash needed to cover burial expenses, medical bills from a final illness, and any outstanding taxes. The examiners expect you to know that without life insurance, an executor might be forced to sell off family assets or property at a loss just to pay these debts. A common trap on the life insurance exam involves the concept of indemnification. You need to remember that life insurance is meant to restore a beneficiary to the same financial position they were in before the loss, not to provide a windfall or a profit. If a question asks whether a policy can be used for speculation, the answer is always no. This ties back to the requirement of insurable interest, which must exist at the time of application. To help you remember the 4 main personal uses of life insurance, use the mnemonic L.I.F.E. The L stands for liabilities, such as mortgages and personal loans. The I stands for income replacement for the surviving spouse and children. The F stands for final expenses, including funeral and administrative costs. Finally, the E stands for education funds for the children. This simple mental shortcut will help you quickly categorize the purpose of a policy when presented with a complex scenario. When you are sitting for the national exam, pay close attention to the wording regarding the standard of living. The goal of life insurance is not just to pay for a funeral, but to ensure that the survivors do not have to relocate or change their lifestyle due to the loss of income. You might see questions regarding the dependency period or the blackout period. These are specific timeframes where the purpose of life insurance becomes even more vital because Social Security benefits might not be available or might be reduced. Understanding that life insurance bridges these financial gaps is key to answering scenario-based questions correctly. Always focus on the idea that life insurance creates an immediate pool of liquidity that did not exist before the death of the insured. This liquidity is what prevents financial hardship and keeps the family's financial plan intact even when the primary earner is gone. Remember that the ultimate purpose is the protection of human life value by creating an immediate estate for those left behind.